All right, this is weird. Good morning, Trade Pros. Hello, good morning. Welcome to Morning Market Update. My phone's like sideways. I don't know if you guys could see me on YouTube. It's kind of funny. Actually, you can. It's just I have this little dot. Hang on one second. Hope you guys had a great weekend. I'm gonna just pretend that it's working. YouTube, I think you could see me. I just don't know how to end it. Oh, I see. It started working. I just can't see the preview anymore. Anywho, hope you guys had a great weekend. I appreciate y'all. And the market's off to a pretty volatile start here this week. On Sunday, the Globex reopened. We're limit down at the moment, meaning the stock market can't drop any further. There's a circuit breaker that's been activated. All right. The coronavirus has really progressed over the weekend. A lot of European countries are on lockdown. The province of Ontario in Canada is also starting to take a little bit more extreme measures. So it's good news because there's a lot of preparedness that we're seeing worldwide to at the end of the day, isolate this. Let's show him my whole Android screen. Hang on, guys. This is the stupidest thing ever. You guys can see all my tabs. Well, you can see what I look at on my Android screen, can't you?
Oh, just put your phone on.
Hang on one second,
Put your
team.
phone on airplane mode because your face is on there.
Oh, hang on. Now you guys get a really close look at my face. This YouTube thing's a disaster. So I did an Android update. We'll get down to business in a second. I don't know how to just show you the camera. All right, this is pretty stupid. Um, YouTube always does this. It'd be nice if YouTube was like, "Hey, we're gonna change everything the next time you turn it on. Here's how it's gonna be changed." I know you're looking at my phone call with the screen app. Hopefully, I don't have anything embarrassing. Look, I have Insight Timer for meditation, Wall Street Journal, Amazon Kindle, Starbucks. Because who need people need. Anyways, I'm gonna just do it like this, and you guys can look at my freaking phone's background. I don't care. Tomorrow we'll figure it out. All right. So, anyways, about this market, we're limit down on the futures, and that's a pretty big deal on the SP 500. I'm actually working from home, which is why the technology is a little screwy today. We'll have it fixed for tomorrow, and I'm going to be working home for a short little bit. I've told the team at Trade Pro Academy to work from home also, just so for our own safety. This thing is becoming a little bit of a pandemic. It has become. Markets getting a little bit of panic as a result. And the Federal Reserve overnight takes massive action. All right. The Federal Reserve has cut the interest rate by a whole percentage point. 1%. All right. That's an emergency cut 4 times. That would take 4 meetings to cut that much. We're down 1%, and they've introduced a new round of stimulus worth $700 billion. All right, so QE is officially on again. This is quantitative easing. All right, the Fed isn't going to be able to call this not QE because it is factually QE. They'll be purchasing 500 billion of government bonds, 200 billion of mortgage-backed securities. So they're providing stimulus to the economy. Meaning, if I'm buying your bonds, what I'm doing is giving you cash. So this is the route or mechanism through which the Federal Reserve provides liquidity to the stock market. And it's important, all right, because usually when the Fed gives stimulus, the markets respond. Imagine being at a party and there's a bowl of punch and rum in the middle, all right? There's a point to which you could keep adding rum to the punch bowl and the party will get better. But then there comes a point where the party's hit its peak, and no matter how much more punch or rum you add to the punch bowl, people are going to be leaving, throwing up all over your sofa, all right, or all lining up for the bathroom. So I think this is the point that the markets hit with the Federal Reserve. When they're throwing in so much stimulus and the market is not responding favorably, I think this is a big sign, right? This week's going to be very important. Do we just sell off a little bit more into the open and then bottom out? Or is there a loss of confidence here in the Federal Reserve from the stock market, which is a lot more of a dangerous scenario? As traders, selfishly, we like volatility, but I got to tell you, this is enough. All right, I don't want to see this market go down anymore. Believe me, there's a lot of opportunity to downside. Our team's cleaning up in the trading room, but I don't want to see this. It's getting to the point where it's getting scary because people who work hard and save their money and put into retirement at this point are the ones having the most amount of loss, and they're not able to respond as much. All right, portfolios are hitting a big drawdown, and it's gotten to the point where yes, a little bit of volatility downside was needed, But now it's getting to the point where it's starting to hurt people. And I think that today, if this thing really craters through the bottom, all right, we could really open it up and it could get very dangerous. We're down 10% already pre-market. We're limit down 5% on the futures, but according to the SPY, the ETF pre-market quotes, looks like we're down about 10%, all right, which is an enormous amount. So we're going to hit the circuit breaker at 7% at 25. Sorry, this is for the H contract. On top of all this, all right, just because it gets even more fun, the futures are rolling over to June. So most people will now be trading the June contract. So you should be on ESM 20, which is the June expiry. All right, on the June expiry series, the limit for 5% down is right now. We've been trading this limit down since about 6:13, like 13 minutes and 32 seconds last night to hit limit down, meaning that there's a circuit breaker, can't drop anymore. 9:30 a.m. that circuit breaker is removed. The 7% is the next circuit breaker that'll be triggered. That's going to be a 2501 half, 2501.50 on the M contract. As soon as we open, that gets triggered again. I'm more than certain that's going to get hit. And there's even a possibility today that the 13% level 2 circuit breaker at 2339 even gets hit. I would not want to see that, because if that one gets hit, we might as well just get the 20 and shut down the market for the day. So today is going to be one of those days where we know it's going to go down, we know it's going to be bearish, but we're not going to get a chance to do much until probably about 10 a.m., especially if we hit these 2 circuit breakers very quickly. So be on the lookout. On a day like today, community is important. I invite you to join ours. I know that, through these moments, when the market's just going up feverishly and you could buy anywhere and make money, there's a saying, don't confuse bulls for brains. And now is the real challenge. So I invite you guys to trade with us, but we'll be here every single morning to support you nonetheless. All right. In the last 10 years or so, something not many people will tell you is the biggest buyers of stocks and in the market have been companies themselves. They're buying back their own shares. All right. So they're purchasing JP Morgan, for example, is using the cash to buy JP Morgan share float. By buying the shares, it reduces the quantity of shares outstanding and profit looks artificially higher, because you got the same amount of profit over less shares gives you a bigger earnings per share. So the banks have been in there. Every single corporation has been buying their own stock. On the weekend, something very significant happened. All right, Bank of America, JP Morgan, Citigroup, all announced they're suspending their buyback programs through Q1 and Q2 of 2020. All right, and they're framing this as we're going to put this capital to use to help businesses and consumers, which is a bunch of BS. All right, if the banks aren't buying their own stocks, you got to start wondering, hey, look, they have this huge capitalization, a lot of savings and money on deck. Why are they not buying their own shares? That's going to scare investors. And I think that's actually one of the other reasons putting some of this pressure to the downside. It's not just the Fed. The Fed cutting rates and announcing stimulus was kind of expected. All right, folks in the business were expecting this move. But what we were expecting is to see it on Wednesday at 2 p.m. It came a little bit early on Sunday, which is a panic move by the Fed. All right, so the Fed throws the kitchen sink at the market. The market's down 5%. Corporations announced they're stopping their buyback programs, and I think that's adding a large degree of weight on the market also. Be very careful today, guys. It's gonna be not nice, and we're gonna see what happens after the open. So let's see how markets are doing overnight. Japan's down 2.5%, Hong Kong down 4%, China down 3.4%, India down another 8%. Huge sell-off there. In Europe, London's down 6.7%. No circuit breakers in Europe. All right, Paris is down 9% in one day so far. Frankfurt's down 8.1%. In the U.S., everything's limit down. NASDAQ, S&P, Dow down 5%. We're trading limit down. We can't go any lower until the open. All right, crude oil is down 5.5%. Very volatile start to the week. I'll let Steven talk about that as part of our oil update in just a moment. Gold is up 0.6% to 1525.80, and Bitcoin is getting absolutely annihilated, down 12.6% to the mid 4,000s today, 4,555. I got to tell you, I'm not surprised, and I do feel the pain out there for crypto investors, for those that are looking at it for the long term. Remember your vision. If you're long term, then think long term. Don't let this opportunity scare you. Maybe even buy more if you really like this asset for the long term. I don't. I never have. I'm going to be honest with you guys. And I'm not happy that it's down just because I don't have it. That's a silly thing. But I'm telling you that Bitcoin had a chance to establish itself as a risk-off asset, meaning when markets panic, they need safety. But the thing about this is that the safety aspect is usually gold. Look at gold. Gold's down as well today. When markets drop like this, people don't care about putting things into assets. They care about putting it in cash. All right. So where we're at today is that a lot of downside. Sell the rallies this morning. You're going to have to participate in the downside. But it's going to be enormously volatile in the morning. Your job here is not to 9:30 get short. Your job is to wait to see where it goes, pick a good level after it moves, and let it settle down. Let some order come back into the market, because at 9:30 a.m. you're going to see chaos. It's going to limit down at 9:30.00. Right as soon as it opens, first, second opening, limit down. 15-minute closure. After that 15-minute, we're got to watch that 13% limit. I don't know if we hit it. Right now we're down about 10. I think we limit down once, reopen at 9:45, and then we'll see what happens. All right, be very, very careful today. Be a part of a community. I love you guys so much, and thanks for tuning in. I apologize about the hardware issues here, the challenges. I know that you're looking at literally my personal phone's home screen as I've been talking for the last little bit. I'm sorry, I'll figure this out today. I'll have it running for tomorrow. Android did a huge OS update over the weekend, and I don't know what the heck's going on. But it's more important I share the message with you than to look pretty on the camera. I do look pretty, so you know the makeup team's job was useless this morning. It spent 4 hours doing my makeup, so I look good enough for YouTube. Here I am, showing you my iPhone screen or my Android screen. Anyways, love you guys. Have a great day. I'll figure this out.